In April 2025, the U.S. executive branch dropped a bombshell on international commerce, a threat to impose a massive 30% tariff on nearly every nation on Earth, a move dubbed Liberation Day. According to every standard economic model, a sudden, arbitrary tax of that magnitude on the entire planet guarantees one outcome: an immediate, devastating global depression. Curious, slightly amused. But look at this line chart. We see a sudden plunge when the announcement drops, but within days, the line violently reverses course, rebounding into an exaggerated, record-breaking spike. The decades-old rulebook of predictable global trade is obsolete. We are now operating in a system where geopolitical chaos directly triggers massive corporate profit. Financial Times commentator Robert Armstrong started tracking this contradictory market behavior. He noticed a persistent pattern. Catastrophic policy threats were suddenly correlating with massive equities rallies. Armstrong coined an acronym to explain it: the taco trade. It stands for Trump Always Chickens Out. Wall Street realized a crucial psychological vulnerability. The administration loves aggressive populist rhetoric, but its tolerance for an actual, sustained stock market decline is practically zero. Institutional investors have reverse-engineered this volatile style of governance into a highly profitable four-step trading playbook. Step 1 is the shock. In October 2025, the administration threatened a 100% tariff on all goods coming out of China. This tactic is designed purely for domestic consumption. Publicly attacking globalism projects strength and rallies the political base. This scatterplot tracks what happens next. Step 2, the reaction. We can see rapid, severe capital outflows erasing $1.5 trillion in market cap in a single day as institutional panic sets in. Target nations immediately strike back. China responded by restricting the export of rare earth elements, escalating the tension to a boiling point. This intense reaction phase creates maximum geopolitical fear. It sets a trap for traditional investors, who panic and sell their assets right at the bottom. Step 3 is the pivot. Watching the market tank, the administration gets terrified. They suddenly delay the tariff deadlines or announce a new round of productive negotiations. Finally, step 4, the recovery. The speculators who confidently bought the dip during the panic, taco traders, cash in massive profits as the market reverts to normal. This creates a state of productive tension. The administration gets political credit for acting tough on trade, while ultimately satisfying international capital by backing down. This four-step loop aligns executive ego with Wall Street algorithms. The geopolitical fakeout is now a standardized, functioning market mechanism. While speculators profit on the swings, American consumers absorb the damage. This constant policy vacillation acts as a hidden tax on certainty. This bar chart compares a flat line for the cost of corporate production against surging consumer price margins. Corporations use the highly publicized tariff threats as a smokescreen to hike prices far beyond their actual costs, a practice known as greedflation. Yale Budget Lab data shows this corporate maneuvering costs the average U.S. household $2,400 in real income loss. Even when the tariffs are eventually canceled, those inflated consumer prices remain. Main Street is permanently funding Wall Street's taco profits. Traders have become so confident in this pattern, they even created a taco index to track it. But this extreme market complacency begs a dangerous question. What happens when a geopolitical threat isn't a bluff? In early 2026, a user on the Reddit forum Wall Street Bets posted a massive taco thesis. They predicted the U.S. would chicken out of attacking Iran because starting a war right before midterm elections would be political suicide. Exactly 15 minutes after the user hit post, the U.S. military launched cruise missiles, instantly destroying his fundamental analysis. Treating aggressive military strikes as a predictable market cycle is a fatal game of Russian roulette. Zooming out, international allies and adversaries are refusing to tolerate this constant executive unpredictability. Nations like China and Canada are actively redesigning their supply chains and internal economies to permanently bypass the United States. It's a process known as balkanization. The taco trade proves you can generate massive short-term profits from chaotic governance. But by forcing the rest of the world to design us out of their future, it guarantees America's long-term isolation from the global economy.